Simon, it's an absolute pleasure to be here. It's my first time at Property Portal Watch, and I've seen these events happen around the world for many, many years, and an absolute honour to be able to speak as well, but mostly to learn from everybody who's here. So, apologies for my gravelly voice, recovering from a bit of cold and flu. A little bit about me. I actually worked in consulting for 10 years. That's why I'm going to show you a 2x2 chart later on. It's part of my DNA. I then worked at PayPal in Australia for around about 5 years during their sort of growth boom in the early 2000s. And I spent 5 years working at RE8 Group, where I was the Executive General Manager of Residential, but also the Chief Customer Product Officer for the last period there. And I moved to Barcelona for love a couple of years ago, met my partner. She had to be here in Spain, so I moved to Barcelona right in the middle of the pandemic, the only Australian to move to Spain at that period. And I've been working with various property portals here in Europe, in the US, and some in Asia, as well as some of the startup businesses that were referred to in the last presentation. What I'll be doing today is talking about a few things. And I'll touch on very similar themes to what Malcolm talked about, but maybe more from the perspective of a property portal. First is, how much more juice is there left to squeeze in the property portal lemon? It's a great business, and many of the people in this room will be in that business, but how much more is there to squeeze? Secondly, I want to talk about if you want to move away from the core property portal business, where to? There's a lot of options, and Malcolm outlined a lot of them, but how do you choose between the different options and which one is right for your business? And lastly, if you want to learn some of those new tricks, particularly having been part of a large successful property portal, what are some of the lessons for actually putting those into place? It's not easy to grow outside of your core business. So let's start on the journey of the squeezing of more juice from the lemon. I want to start in 1995, a great year because Seal was the #1 act globally with Kiss from a Rose. Less of a fantastic year in 2005 when Kelly Clarkson's Since You've Been Gone was probably the best memorable song for that year. And she also was the first person to take the Y and the O out of You. But what happened between those 2 years is that pretty much every one of the leading property portals in the world was formed. So these are old businesses. We're talking about something that is quite old. And if you're actually one of these top businesses, it's not a bad place to be. And obviously everybody's margins differ, but as Malcolm pointed out, gross margins are pretty much 100%. There's no cost of goods sold. And a lot of the top portals have actually consistently delivered margins in the 30 to 50, sometimes 60+% margin. And actually even second and third players in markets can be very successful businesses. It is not a bad place to be as a number 2 or number 3 portal in a mature world. The business model is not exactly cutting edge or innovative. In fact, if you look at most of them, and I've got here Rightmove, ImmoScout and RE8, lo and behold, we've all got pretty much the same thing. 3 tiers of packages, the small, the medium, the large. And many markets have copied this business model. So it's not something that is cutting edge yet. If you look over the long term, and obviously the last year has not been a good one, but if you look at the long term, these businesses have continued to add enormous growth. And we talked about the fact that Redfin's not even a unicorn. Just looking at REA, Rightmove and Scout, that's $20 billion of combined market cap after they've all cratered by 15, 20, 30% in the last 12 months. So there's something in this whole thing. And what there is the core business. There is not a lot of revenue that any of these businesses generate beyond their core. And some are being more adventurous in pushing beyond the core, but for the most part, 70% plus of the revenue, and I was tempted to put 100% plus of the profit of the businesses that I've been associated with, still comes from the core. So the question is, how much more can this give? Can the leading property portals and the number 2 and 3 players continue to grow their core business, or do they have to go very aggressively looking at some of those new business opportunities? So I'll start with a few things that are giving us a little bit of confidence. Not giving us a lot of confidence. Reasons to be pessimistic. There's not a lot of people going online. There's no more newspaper ads. People are not shifting into online or into mobile apps. Pretty much the audience is there, and it's hard to move an audience. Any number 2 or number 3 player knows how hard it is to increase audience versus a leader. But even leaders really struggle to increase audience. Another reason to be pessimistic is that agents are getting smarter. They're not standing still. They're building their own databases, they're using new technologies, they're taking advantage of social media. It's not as easy to provide value to agents today as it was in the past. You've also got a lot of new entrants coming along. Like somebody's knocking on the door. I read Property Portal Watch every week, and it seems like there's a new entrant in the UK every single week. It must be an incredibly attractive market. And it is, because with all those margins and revenue and growth and market cap, there are new players coming and keeping the old incumbents honest all the time. In addition to that, it's getting harder to actually add meaningful innovation. I remember one agent came to me in Australia and said, we have never sold one more property because it's been listed on realestate.com.au. Not one. You've helped us maybe get marginally higher revenue through our commissions, but actually we've never sold more. And so it's getting harder and harder to add real innovation in a property portal business. The big ones that I saw in my time were mobile apps and then notifications and engaging users more. But now, artificial intelligence, more push notifications, virtual tours, recommendations, all of these new products don't dramatically shift the balance between what you give a consumer and what they're willing to pay for it. Talking about consumers, there's an obvious tension. I'm sure anybody who works in a property portal, you have this tension between how much do I create a fantastic consumer experience versus how much do I try to monetize and give value to our customers, our agents advertising on the platform. And that weighting is tilting more and more towards consumer experience. And I felt that in my time at REA, and I see that in many other businesses. The consumer has to come first. And it's harder and harder to be pushing these fairly crude monetization models through a property portal. So that's not great. And if you put all of that together, you say the days of those massive price increases are gone. It's not so easy. You don't see property portals out there increasing price by 20, 30, 40, 50% every year. It's just not that easy anymore. So those are some reasons to be pessimistic, but there's also some reasons to be optimistic. And I'm actually, at the end, an optimist. The first thing is, it's still pretty small how much money property portals make. And Malcolm said, the £300, I think you quoted on Rightmove, which is a leading player. Many portals, the average portal is not making more than a couple of €100 on every property that's sold off that portal. Relative to all of the other costs, and particularly to agent commissions, portals are still quite cheap. So there is an element of value that you can extract relative to what is provided for the property seller on a portal that is not yet fully extracted. It's also bloody hard to demonstrate that value. How do you really show the value of portals? And iVox are a key sponsor here, but they do a fantastic job of actually helping portals demonstrate the value they provide. But the reality is it's really, really hard to demonstrate the value. A little bit in buyers, because some buyers don't actually go through an inquiry process, and you have to put phone reveals and other things to actually demonstrate the value. But also the branding and seller lead generation of portals is enormous, and it's very, very hard to quantify that. So I think as portals invest more and more time and effort in demonstrating that value, you'll be able to extract more. There's also a relatively limited amount of customization by vertical. Residential for sale is obviously the core of most portals, but one of the things we did very well at REA, and I've seen others do well as well, is start to focus in on those other segments. So new developments is an area that many portals have not developed a great experience, either for the seeker of property or for the advertiser of property. Rent versus sale. Many portals still have pretty much the same experience and pretty much the same monetization model for rent and sale. And so being able to split those out and create a custom experience. And at the bottom end of the commercial space, there's also often a lot of local businesses that are advertised on portals very much in the same way that they're advertising residential. So addressing those sub-segments of particularly rent, new developments and commercial offers an opportunity to actually extract more value. Now, the most important thing, I think, is that customers, the consumers, are not going anywhere. It's true that it's really hard to shift audience, but actually that's really good because most people have an ingrained preference for going to one portal or another, and those consumers are not going anywhere. And so as buyers, they keep coming back and they expect to see properties there. And for sellers, it's very hard to advertise a property or to sell a property or to trust an agent to sell your property if it's not going on to one of the leading property portals. So this drives enormous pricing power, enormous control and capability for portals to actually generate more value. One that's really important for me and a lesson that comes from particularly REA's experience is that agents use portals to compete against one another. It's not easy to be a real estate agent, but one way that agents can differentiate their service from their competitors is actually by being a preferred customer portals. And Zillow has done a fantastic job through Premier Agent, for example. And there's a lot more scope to understand the market dynamics that portals can actually support agents in winning business from their competitors. And it's an essential part of the portal value proposition that's not related to consumers who are buying or selling, it's related to the dynamics of agents in particular. And lastly, this model has been tried and tested. This is not something that is, a potential concept like, iBuying. It's a proven business model. So we should be comfortable with the fact that this is a model that others have done well. In fact, if I look at my own personal experience, I joined REA around about 2015, and this chart shows the height of the bars is essentially the penetration, the percentage of listings that are on REA that are paid, and the colour combinations are they paid at a large, medium or small level. So the red is the large. And so when I joined REA, you can see the penetration bar was pretty good already. I can't tell you exactly what it was, but you can see what has increased significantly is the penetration of their highest products. So when I was there from 2015 to roughly, I was there till 2020, the bars kept rising and the increments kept going up. And it's the same story if you're at Zillow, it's the same story if you're at Rightmove, same story if you're at many other leading portals. And they keep doing this over a long period of time. And so REA has marched through this focus on the core year after year, delivering. So my verdict is, if you're in the portal business, there is actually plenty of juice still to squeeze from the lemon. Now, how to maximise the core. A few lessons. This is one of my favourite New Yorker cartoons, The Old Tricks Young Fellow Have Served Me Well. Old dogs can teach new dogs some good new tricks. Some of these that I've seen in the past, you have to focus on the consumer experience. There is no property portal or marketplace business that doesn't have consumers. If you don't have the consumers, it's very, very hard to monetize. So that relentless focus on all those little 1% experiences that make the consumer come back again and again. Secondly, devoting serious resources to monetization. At REA, our biggest team, our most capable team, was pretty much entirely focused on the agents and monetizing agents. This is not an insignificant task, and it was a always-on, constant year-after-year effort to drive monetization. It is a maniacal focus to do this. It is not something that happens just through an occasional project. Thirdly, take advantage of that agent competition dynamic. Really understanding the local market, and this can be down to the local market. Madrid is different from Barcelona. There are different suburbs within Madrid. Really understanding the dynamics of the local market and customizing product and pricing to those local market dynamics can drive more and more value out of the core. Another lesson learned is bundling. It is really hard to sell a new product. It is incredibly difficult, but it is a lot easier in my experience to bundle new products in with old ones and grow the pie that way. Lastly, I think it's important to focus on top customers. In most real estate markets, yes, there is a long tail of real estate agents, but there are probably 20 or 30% who are market movers, market leaders, and those are the agents who you can focus on influencing, and they will then bring the rest of the market with them. So focusing on those market leaders is critical. And to finish off, not reinventing the wheel is a real temptation to think about different models, moving too fast, changing things up, but just year after year coming back and consistently focusing on improving all of those 1% experiences for consumers and for agents is critical to driving core value. Okay, so where to from next? There's a few questions. Assuming even you do have a great core business, you probably still want to move beyond the core. A few reasons. First of all, it's going to slow eventually. There's no doubt, you looked at those charts from REA, looked at the charts that Malcolm shared, it's getting harder and harder to grow in a mature market, a property portal business at the same rate that it had in the past. Investors are also expecting a pretty high return. The PE ratios for property portals are still at very high levels, even after coming off a bit in the last year or so. And so there's expectation from investors, either public markets or private owners, that this is a business that is going to grow really rapidly. Thirdly, if you're sitting on a bunch of cash, you have to figure out what to do with it. There's actually it's a dilemma for many businesses. What do I do with this cash? Am I just going to give it back to shareholders? Am I going to distribute dividends? Not really typical for most portal businesses. So where am I going to deploy this cash to generate future value? And lastly, everyone wants to lay that next golden egg. And even the number 2 and number 3 players, in fact, particularly number 2 and number 3 players, are saying, how can I lay that next golden egg that will be just like the Rightmove business of the past? So there's a million different ways you can think about these adjacencies, but I've tried to lay out a framework here that is helpful. The first is up at the top. You can add more value to buyers and renters. So these are your customers today. They're using the platform. How can we add more value to them? Secondly, on the left, you can add more value to agents. An obvious place to go, another shared customer. If you come over to the right here, you can actually add more value to the sellers or the landlords, the people who are ultimately your true customers advertising the properties on the platform. Or you can move into financial services, as pretty much most of the leading property portals have done. And lastly, you can take the moonshot, which is getting into the sales transactions. And I've focused on sales transactions here, but the rent transaction is equally attractive in many ways. So I'll go through some examples of these and then talk about a framework for assessing them. The first example is around more value to buyers and renters. And we see that a lot in offering premium services to buyers and renters, all the way up to a concierge service. Being able to offer rental passports and smooth the process of actually applying for and being approved for a rental application. The obvious things around enabling utilities, moving, renovations, all of those activities associated with changing your property. And then lastly, some of the underlying legal, conveyancing and other settlements activities. So these are services that feel really obvious if you're thinking about supporting your buyers and renters with more capability. You can also say, well, let's go into the agent side. And there's many property portals. In fact, increasingly over the last 6 months, more and more property portals have started to buy agent software. These can be CRMs for the sales space or the rent space or other types of agent software. Data and insights for agents, comparative market analysis, tools that agents can use to predict future market opportunities. Those are incredibly popular as well. You can go into operational tools for agents, offering them tools like floor plans, 3D tours, helping them run their business more effectively. And ultimately, the one that everyone's talked about probably 3 years ago and a little less today is generating seller leads. The lifeblood of any real estate agency is how many seller leads they can bring in. There is a rich history of agents paying for those seller leads between one another. Surely portals should be able to generate seller leads to agents. Within the value to sellers and landlords space, there's also other examples. So you could actually start with the very basics of valuations, property price recommendations and the like. Obviously, the flip side of the agent lead generation business is selecting and helping a property seller find an agent. Buy now, pay later for selling costs is something that is an interesting innovation, sort of bridges the finance world as well, helping a seller pay for minor renovations to the house, the property photography, the property advertising, and again, it's something that is an emerging opportunity. Lastly, seller tools. So all of those things that you offer to sellers just help them, particularly in a C2C environment, manage the sale of their property, legal, photography, staging of their property before inspections. The next area is financial services and some obvious places to go. And this is where many of the biggest portals in the world have gone, and I'll come to why I think that's the case. Mortgage broking, mortgage generation, to actually offer your own mortgage. We did that at REA. We had an REA mortgage. It was a fairly spectacular failure. Insurance is another area of financial services that feels very obvious to go to as people are moving into the property that they're moving into property transaction. And lastly, bridge finance. Malcolm mentioned this as well, being able to provide the ability to provide a down payment solution or buy before you sell before you buy, all of those bridge finance capabilities that smooth the process of the transaction from a financial perspective. And then the last area is facilitating the transaction. We've talked about some of these already. Being a digital broker or a tech-enabled broker, very exciting opportunity, but a difficult one for portals to come to. Moving into the iBuyer space, which obviously Zillow did with gusto and came a cropper initially, but it's probably not something that should be discounted in the long term. Becoming a C2C platform for exchanging property, and that's a desire that actually smooths and removes the agents completely from the transaction. Or lastly, becoming a property transaction platform. And if you look in Australia, it's probably one of the key markets where this has happened. There is a business that has actually set itself up as the place for exchanging settlement documents, finance, etc. So there's all of those different opportunities. how do you choose between these different options? There's three broad ways to think about this. One is it an attractive industry? So is it profitable? Is it growing? What is the size? The second is actually, can I win? Do I have customer capability? Do I have some insight and shared costs with the industry that I'm moving into? Am I able to be a successful player in this market? But probably the most important one is just the risk appetite, the oh shit factor. And many of these businesses, particularly the ones that are more profitable and moving towards a transaction, require you to take on a level of risk that is very different from being in the boring old property portal business. This is a completely non-scientific and generic view from me of where these different opportunities sit across that 2x2. And it will vary from market to market, it will vary from business to business. But if we start in the bottom right-hand corner, in fact, if we start in the top right-hand corner, there's none in the top right-hand corner. Not surprisingly, there are no really obvious places to go. But if you look at the size of the prize and the ability to win, and you start with number one, which is more value to buyers and renters, this is an easy place to go in terms of the oh shit factor, and therefore it's colour-coded green. Reasonably good ability to win. There's not too many other players who have the voice of those buyers and renters more than you as a property portal. However, the size of the prize is relatively minimal, and the type of services we talked about are more clipping the ticket. And I think that's something that, ImmoScout, for example, has done a fantastic job of doing this, and they've created a great flywheel, but it's not generating transformational revenues. If we move to number two, more value to agents, it's probably somewhere in the lower area of ability to win in some ways, because agents, in my view, don't see property portals as a natural place to buy their services from. They're either suspicious of property portals, or they don't think the property portals have the capability and credibility to own and build products that service their needs. At the same time, it's a slightly more profitable business. Software for agents is actually well proven, and there's a lot of scalability you can deliver in that software, but it's probably not an easy one for the portals to win in. If we move to number three, with the more value to sellers and landlords, this is one that is really, really challenging, in part because you're now starting to compete with the agents who are your customers and who consider those seller and landlords to be their customers. So it's a tough one to win in, and it also has relatively limited value. The type of services that you're offering, again, are often just going to be clipping the ticket and relatively low transaction value. Financial services is a place where there's probably more green space and less feeling of threat if you go into that area. But as Zillow and REA and others have proven, it's very hard to be profitable. So the size of prize there, I would argue, is actually relatively modest. And also, it's difficult to win because you're competing against banks. You're competing against large intermediaries who have the voice of the customer, and it's very difficult to get penetration and market share. And that leaves number five, which is going for the facilitation of sales transactions. And whether that's in an iBuyer model or trying to build a whole transaction ecosystem, it's incredibly hard to do, but it's where the next laying of the golden egg will happen. That is where the true value, as Malcolm was saying, is going to be delivered. Are you willing to become a digital broker? Are you willing to try to develop a whole ecosystem for people to transact without agents? That's where the opportunity lies to really deliver breakthrough revenue growth, but are you going to be willing to take on that oh shit risk? So the verdict on these things. The golden eggs will definitely be laid in the transactional space from my point of view, but there's actually other options, and it's not necessary to grow portal revenue that you actually sit inside that high-risk area. Just to finish up, a few quick thoughts on learning new tricks. The reality is that your dog bowl will be moved at some point, so how do you actually go and learn those new tricks? Some ways that property portals struggle, and certainly in my experience, I've seen property portals struggle close up. One, you don't make sufficient investment, that you're simply not putting enough resources in. Secondly, that you have a lack of expertise. You're good at being a property portal, but you don't know how to do other things. Thirdly, that the DNA is wrong. You're an established 20-year-old business. How do you build the DNA of a startup that can run rings around you? Fourthly, that you're impatient. You try it for a year, it doesn't work, and move on. And lastly, that you're simply too scared to take on the big, hairy goal. So, some ways to get around this. Firstly, commit to new stuff only after proper analysis. This is not something to be trifled with. It's not something to be, spending a few hours a day here and there just trying to spray a few items. Really do the work and think thoughtfully, commit to something. Secondly, be bold and make that commitment really, really clear. Doing a half measure doesn't make sense. Go all in and focus on your employees, the market, your customers, everybody, and making it clear that this is where you're going and it's what you're going to do. Thirdly, giving the new enterprise enough space in your entity, giving them enough autonomy to work and be separate. Don't burden them with expectations of the core business. And lastly, look outside your business for solutions. My view is that some of the best growth options are going to be achieved through acquisition. You are sitting on a lot of cash. You do have a good balance sheet. Look outside and don't try to build everything yourself, but thinking about buying in either talent and or different businesses to help you grow outside the core. So, in conclusion, the juice is worth the squeeze. There is plenty left in the property portal core business. Secondly, get close to the sales transaction if you are willing to take on the risk and you're bold and brave, but otherwise, think about other options for growth. They exist. And thirdly, learn new tricks by fully committing to them. Being half-hearted doesn't get you anywhere in this market. Thanks very much.
Thank you. I'll take that. We're still going to ask you some questions.
Sounds good.
Got 5 minutes of questions. If we could bring them up, it'd be fantastic. The one that has been most popular asked is, why did the REA mortgages fail, which you said?
Yep.
And what lessons were learned?
So why did it fail? We went to a partnership with one of Australia's big four banks, the National Australia Bank, and we thought that we could digitise mortgages the same way that we had digitised the property search process. And so we thought, hey, surely the banks are just not digitally savvy enough to do this. We can build an end-to-end digital experience and offer an REA home loan. And it turned out it was a lot more difficult to build a straight-through digital process than we thought. We still relied on a lot of manual processes with our partner bank, NAB, and actually consumers just weren't that interested. They actually wanted to go to a mortgage broker rather than to look for a mortgage online when it was something that was going to be their biggest purchase, their biggest financial commitment for the next 20 years.
Okay. Interesting observation. It was the second time they failed at REA Mortgages.
You've done it.
I know, because back in 2005, there was REA Home Loans, which was a joint venture with Ray White and the large mortgage broking business. That failed and was sold. Tried it again, didn't work, and now I think the third go is buying... Yeah,
so the lesson we learned was that most people were not actually filling out an online form. They were ringing us, and when they rang us, they didn't want an REA digital mortgage, they wanted to talk a mortgage broker. So we pivoted to actually invest in a mortgage broker, and actually REA bought one of the market leaders in Australia, now is the owner of 1,000 mortgage brokers work in the REA group now. So almost as many, if not more, people work in REA mortgages than in the core business.
Right. So the bottom line is, if you want to move into a new area, acquisition is probably the best strategy.
That would be my recommendation.
Is there any good example of monetising buyers that you know of?
I think by far the best is the Plus products that ImmoScout have put in place in Germany. I think hats off to them. They've done a great job. They've focused more on renters, I'd say, on the monetisation side. So the Plus product for rent is very strong, but they've also got some good traction on the buyer side. I haven't seen many examples outside of ImmoScout.
Okay. Do you want to talk a bit more about this Plus product?
Yeah, I mean, I'll let others who are in the room from ImmoScout do a better job than me. But essentially the Plus product is offered in a rent and a buy version, and it enables you to get priority access to listings. It gives you additional discounts on other services. It gives you also, they will tell you more about it more. But essentially it gives you a privileged access to listings and access to things like a Schufa score, which is like a rent qualification score as well.
Okay. Why do you, next one down, why do you think it is hard to increase prices if portals charge only a small fraction of the commission pool?
That's a good question. It's hard because the percentage increase is high, and that's what the perception of the agents or the customers will be. So you may only be increasing prices by 15, 20, 30, 40 euros, but if that's coming off a €100 base, that is perceived as a very high increase. Also, agents are incredibly stingy, and they really don't like spending money, particularly when they have to pull it out of their own pocket. So, it is difficult to extract more value even though the value you're providing is probably a lot greater than what you're charging today.
Okay. If you're back at the REA Group, which additional value options would you lean into and why?
I would probably continue with the mortgage space. I think it's somewhere that you play very well. But I'd also like to see REA moving into alternative financial services. So the ones that Malcolm was talking about, buy before you sell, rent to buy, sell before you buy, shared equity amongst different players. So you're inviting friends and family into the mortgage process. I'd like to see a lot more innovation in those mortgages, not just a mortgage buying process.
Yeah. What products worked best for you at your time at REA?
The biggest, most successful product was our Premier product. It was the top of the line, buy your maximum add value, throw in all the value that we could possibly put into that, and then bundle it with a couple of other products, one which was a projection of the ad off into social media, another was just a very simple EDM that went out a week after the property was on the site. So bundling those together in a Premier, it was just take it or leave it, it's the best, was by far the most successful.
Why do you think the transactional model is a moonshot?
I think in mature markets, I'm guessing Emre might be from Turkey, in which case it's not a moonshot in Turkey or in many other developed emerging markets. I think it's a moonshot for portals because it's a long way away from their capability, and it also goes quite directly against the business model of their key customers. So I think for a core market portal to go into the transactional space is hard to execute and risks your core business in a big way.
Okay. Last question. What is most important to invest in? Products for private realtors, private sellers I think it means, or for real estate agencies?
I think it depends on the market, but in most markets I would say real estate agencies. The value that you have a real estate agency is that they give you scale in distribution of your products to private sellers. Reaching private sellers directly can be more challenging.
Okay, fantastic. Andrew, thank you for your insights.
Pleasure.
Thank you.